Welcome back friends to the class number 61. In the previous video we have discussed the basic concept of cash flow analysis. We have tried to calculate the what we call cash accruals or net cash accruals in the previous video. Now in this video I want to focus on one additional thing that I have missed in previous video. That is the basic difference between normal profits and operating profits. In previous video we have calculated what we call normal profits, but when we talk about operating profits, then the concept slightly changes here. So what are normal profits? So normal profits, we say, it includes income from non-business operations also. For example, if the client is into textile business, and the client has given electricity security to the electricity department, and the electricity department pays him 6% interest on it. So this electricity security will remain with the electricity department till the life cycle of the business, and that 6% interest will be continued to be earned on that FD with the electricity department till the time that FD is kept with the electricity department. So the core business of the client is of textile, right? But this 6% interest income, this is not a income which is basically from a textile related activities. In textile related activities, you are, for example, buying yarn, you are making garments, and you are selling the garments, you are earning profit on selling the garments, right? So that core activity of textile is something different, and that 6% interest income on your electricity security is kind of something different, right? But this 6% interest income that you earn is a part of your business, kind of, but not a direct business, but you can say other part of the business, other nature of income of the business, right? So it is associated with the your core business, but it is not the core business, right? So when we calculate the normal profits like we have did in the previous video, we are not excluding these type of income from that profits, right? We are not excluding this type of income because we are assuming that since in the future the electricity security will remain with the electricity department, so that interest income on that security will continue to be earned by the business in the future as well, although this is not the core business of the client, core business profit of the client, right? So these are the examples of other incomes which are ancillary, or you can say additional in the business, but not part of the core business, right? So interest received on any FD, if you are kept any FD as a security with the bank, or any FD with the government for securing any contract, right? Any income from the investments that you have done as a part of your business, any income you are getting from your subsidiary companies, you have taken 51% stake in your subsidiary company, and the subsidiary company is paying you dividend, or you are generating some profits from your investments from your subsidiary company. So these investments, these profits, you will continue to earn these profits in future as well, these incomes as well, but these are not related to your core business, right? So in the previous videos calculation that we have done, we have included we have presumed that these kind of incomes will be included in the calculation of net cash accruals, right? So generally these are the incomes, there are no such corresponding expenses, and these are difficult to be traced. When we earn these type of incomes, right, we cannot trace any simultaneous expense which is related to earning these incomes. Normally when we do sales of rupees 100, we track back the expenses like purchases, freight, salary, which have helped us in generating that sales, right? But when you earn these type of incomes which are regular in nature, you cannot trace any expenses related to them. So these remains incomes only, right? So you have included these incomes in net cash accrual calculation, so you are getting your normal cash profit. But sometimes investors or sometimes lenders want to see how much business is generating from its core business activities, how much profit is generated from its core business activities. Then comes the concept of operating profits. In operating profits, we technically want to know if the client is doing the business of textile, then how much income is generated from textile and textile only, not any other source of income, from only textile business, right? So if we want to calculate the only textile business income, only the core business income, then we have to calculate operating profit. So how do we calculate operating profit? So basically this is the core business profit from the only business activities, right? So we want to learn how much business has earned from its core business operations, that I have already explained to you. So what we will do, we will take the net cash normal profits that we have calculated in the previous video, that the answer of which was nil in the previous video. So we will take that figure, we will deduct any non-operating income, any income which was although regular in nature, which we will continue to earn in future, but it doesn't relate to our core business activity. I have already given you some examples. So we will deduct all these type of incomes from here, right? And we add back any non-operating expense, any expense, if we can find that these expenses are not related to the core business of the client. But let me tell you friends, these are very difficult to find, and normally in 99.99% cases you cannot technically trace them, right? So if they can be identified, then you add them back, but 99.99% of the times you cannot identify them. You can only identify these exceptional or these non-operating incomes. So technically, in practical scenarios, your net cash normal profits minus your non-operating incomes, you get your cash operating profits, right? So you get your cash operating profits, and these represents the cash that you have earned from your core and your principal business activities, right? So this was the difference that I wanted to explain, that I have forgot to explain in the previous video. Now you have understood that. We will be in the next video, we will be discussing about EBITDA and PBDIT margin. Stay tuned with this channel. Thank you very much.